Fast casual stocks, are they a dine or dash here for investors? McDonald's shares still under a bit of pressure following the Big Mac maker's first quarterly sales miss in nearly 4 years. You're looking at losses of just about 3.5% over the last 5 days. The results hurt by the war in the Middle East. So as we look ahead to some of the other results that we will be getting, including Yum Brands, who's set to report Wednesday before the bell, investors want to know, is this the start of a larger trend within the industry? We want to bring in Gregory Francfort. He's at Guggenheim Securities, a senior analyst. Greg, it's great to have you here. So let's talk about what we just heard from McDonald's, whether or not that is the start of a larger trend. Do you expect some of the other rivals within this space to be hurt by the pushback that we're seeing amid the ongoing war in the Middle East?
Yeah, I think it's very clear this is likely to happen. We put out a note last week expecting pressure across the Middle East, but not just the Middle East. You're seeing pressure out of Malaysia and Indonesia. They're two countries with heavily Muslim populations that I think those areas of the world are seeing pressure against American brands. And we don't expect it to be any different for Yum. Maybe a little bit lighter because McDonald's is generally the beacon for American sentiment. But we expect pressure internationally for sure.
Is there one subsidiary? I mean, we're talking KFC, Taco Bell, Pizza Hut for Yum. Is there one subsidiary that has perhaps more of a risk that we'll see show up in some of the worldwide system sales performance?
Yes. So Yum has 4 brands. They have KFC, Taco Bell, Pizza Hut, and Habit Burger. Habit being much smaller than the other 3. KFC is a global restaurant business. I mean, you and I have, I'm sure, eaten at KFC in the U.S., pizza in the U.S., Taco Bell. Yeah, I know. My girlfriend tells me that all the time. But I think KFC is really very strong internationally. They have large presences in Asia, the Middle East, Europe, and it's actually 13% of the overall Yum business comes out of China. I mean, so I think sometimes we forget that this is really a global expansion story. They are growing units 5 to 6% a year around the world. I mean, this is a very powerful growth story, but we expect a little bit of a hiccup in terms of same-store sales here in the near term.
How big of a hiccup are you expecting that we could potentially see here?
Yeah, I mean, if you go back 3 months ago, we were expecting a pretty solid beat on KFC in the next year and even in the quarter. Now we're expecting, our model is for 2% same-store sales growth in the quarter. The street has 4.8%, so we're sizably below the street. And I think that's going to come out of a 20 to 30% slowdown in the Middle East, which is 6% of KFC's global sales. We expect a double-digit slowdown in parts of Southeast Asia, which Malaysia and Indonesia are each 2% of KFC's global sales. But again, we think this is somewhat a factor in the stock. The stock trades at 22.5 times earnings for double-digit earnings growth. Other companies with a similar profile trade at 24 to 26 times. So we think it's getting factored in here.
Where are we seeing menu innovation efforts for Yum Brands and more broadly, perhaps across some of the quick service restaurants actually be in those efforts realized by the companies as consumers are trying to evaluate, okay, a fresh farm to table option versus something that they know might not be as fresh and perhaps never frozen, I'll use that, I guess, as they're kind of evaluating what is healthy versus what actually fits in with, just trying to get something quick, eat it, keep going.
Yeah, it's funny. I think sometimes consumers want to eat healthy, but a lot of the decisions they make sometimes don't necessarily reflect that. I think one of the things that's really important for a lot of these businesses is to have the best value to the consumer. I mean, you look at some of the strongest growth business in the restaurant industry. You look at Wingstop, you look at Texas Roadhouse. These are businesses that price 10 to 15% below their competitors and make up for it on traffic volume. So I think what's very clear to us is the U.S. consumer values price kind of more than anything else.
Do you believe that the U.S. consumer as well is also going to moderate, perhaps lower a little bit for some of the quick service restaurants as a result of GLP-1s and other weight loss or obesity related drugs?
I suspect that that's going to be a factor over time. We think it will be a small factor because it will get slowly. We expect GLP-1s to slowly grow and that to slowly pressure the restaurant businesses. But we don't expect necessarily a sharp slowdown anytime in 2024 or 2025 because of that. We are seeing a little bit of McDonald's noted this. There is a little bit of a pushback from lower income consumers just given tightness on the wallet. So I think we are seeing some evidence a little bit of a slow start to 2024 because of that. It's going to be very hard to disaggregate some of these factors like GLP-1s versus value and other factors.
Fair point. Greg, always a pleasure to get some of your insights. Thanks so much for joining us here this morning. Gregory Francfort, who is the Guggenheim Securities Senior Analyst. Appreciate it.